Welcome to Shadow of Truth, and today is Monday, October the 24th, 2016. And your hosts are Dave Kranzler from InvestmentResearchDynamics.com and Rory Hall from thedailycoin.org. And it is with great honor and much fanfare that we welcome back to the show Mr. Bill Murphy from La Metropole Cafe. Bill, how you doing today?
Great to be here, Rory. Good to talk to you, Dave, and thanks much.
Dave, how's it going over on your side?
It's going well here. Just another day, another hit on the gold market, and I know all of us are a little bit hot under the collar about this, so I'm looking forward to hearing what Bill has to say about it.
Well, it's the same old stuff in the sense of smiles to frowns.
Another day, another gold hit.
Oh, it's disgusting. I mean, you run out of either expletives or just, I mean, words of disgust. I mean, it just never ends. I mean, it's, you know, they can't allow a smile for more than 15 minutes.
Well, it went straight up. Gold and silver went straight up about an hour ago, it looks like, and then it kind of moved sideways for just a minute and then straight back down. That's today. That's within the last hour.
Yeah, all they did was they got surprised. You know, I had a pop. They regrouped, sold the rally, attacked again.
Well, it was hinged on two economic reports, because this morning, when gold went up, it was 8:30 Eastern time. So it was a few minutes after the Comex floor opened, and it shot up when the Chicago Fed National Activity Index was released. And it was negative again. I think the expectation was it'd be slightly positive. August, it was minus 0.55, and they revised it down to minus 0.72. Now that index, the way it's calculated, it's really hard to move the needle. So a 0.17 downward revision means the economy was way worse in August than the Chicago National Fed Index originally represented it to be. It's got 85 different data series in it. So, and gold shot up when that report was released. And then when the PMI, I guess it's the flash index or something, it's not even that big a deal of an index anymore. It's the PMI Manufacturing Index Flash, so it's not even really an official statistic, came out, and it came out better than expected, and they slammed gold on the idea that, oh no, now they're going to have to raise interest rates because of this indicator. But of course they didn't slam the stock market, which, you know, if they're going to raise interest rates, it's going to hit everything that's the so-called risk assets that the hedge funds pile into, right? But they only hit gold.
Well, exactly, and well said. And that's, of course, my bitch all the time. And what's good for the goose is not good for the gander, and it just shows what we keep talking about for the last 2 decades. It's a joke.
I know Rory has a good topic to go into with you, but real quickly, do you think that? I kind of think the reason that they're working so hard to hit gold, and I don't know about you, Bill, but I mean, this is intense an effort to keep gold from moving higher as I've seen in the 15 years that I've been doing this sector. And I'm starting to me, it feels like 2008, where they took down gold quite a bit ahead of the collapse of Lehman and really what I call the de facto collapse of the financial system. I'm wondering if you think maybe there's some really, forget the election, who cares who wins, if there's some really ugly events on the horizon and they're trying to take down gold so that when it does move higher, it starts from as low a starting point as possible.
Well, that's what my friend John Embry thinks. He says he thinks something is really terrible behind the scenes, and this is what they're trying to mask. Exactly. That's John's thoughts.
Which makes sense. I mean, there's so much ugly out there. I mean, it's getting harder, as you pointed out just a moment ago, Dave. It's getting harder and harder for these guys to manipulate these statistics that prop up the market. I mean, every time you turn around, there's more bad economic news that's coming out. and it's getting so bad that, like I said, it's getting harder for them, or it seems to be more of a challenge for them to be able to manipulate the headlines that feed the algos that feed into these markets. I mean, and they can only make adjustments afterwards, after something has hit the tape, and gold has gone up or the stock market has gone down, and it's only in hindsight at this point. I mean, that's what it seems to be anyway. And the saber rattling that's coming out of Russia, the saber rattling coming out of the warmongers in Washington D.C. I mean, it just seems like that we're on the brink of something major happening. And will it be tied to the election? Maybe, maybe not. Who knows?
What word are you? Disgusting to watch. I mean, all the bullish fundamentals and any of the smart guys in our camp, and Dave, you're at the top of the list, of course. None of it makes a bit of difference. Nothing. Whether you go for those things, or you go to the debt, or you go to what's really going on in the economy. I mean, the printing of the money. I mean, all these factors, and it goes back to 2011 when they decided to make their move. After we had that managed retreat, they've attacked ever since. And none of those bullish factors since then have meant one thing: nothing.
And speaking of which, I mean, what do you think is the reality of it is? I mean, as far as the fundamentals coming back into the fold, Bill. I mean, is that ever going to happen again? I mean, are the troops going to be able to rally and overwhelm this market, or are the machines too powerful at this point?
I think it's all going to change and be very different, very drastic next time. We won't have the managed retreat. It's going to explode. The fundamentals are all going to eventually play out, and it's going to be a spectacular situation. And it's just building, and it's just frustrating to see what they're doing. But that's the way it is, and what we have to live with. And as far as the election goes, I don't know if it's going to matter, who wins. I mean, theoretically, Clinton's supposed to be for the little guy, which really hasn't worked out too well in terms of Obama and the rest of the Democrats of late. But it's we all know what that's all about, and we know the rich and powerful, the mainstream, want the establishment, want Clinton to maintain the status quo and so on. So it's just been, this has been an expected rough go, with the Dow going right back to 18,200 no matter what happens. And we just got to get through this period. And yes, the fundamentals are going to play out in a major league way. And I think the next move up will be an explosive one, not a gradual one like we had for so many years.
It's 2150. You're still your cutoff on silver. And how are we going to get back to that?
Well, yeah, silver, what a disappointment that has been. I mean, it looked like it was in play, and the way it blew through 1850, and 21 was the next key, and the way I saw it technically, and then it could really explode after that. And the bad guys, as I call them, and J.P. Morgan and friends went all out to stop it there. The open interest went to over about 225,000, some 30,000 over the old all-time highs, and specs piled in, and it appeared it could be in play after all these years of being at such lowly prices. And they were just setting up another attack, and now we're down at the pitiful low levels around 1750 again. And I'm expecting silver to go to 50 and then 100. And I think when it goes, as per this conversation, it's going to be explosive this time, and go up even quicker than we did in 2011 when they finally lose control.
Well, the one thing about silver, Bill, at least for my opinion, and again, in the absence of a manipulated market, we both know silver would probably be at least at $100 an ounce right now. But let's just look at it. I mean, for now, still the tail that wags the dog are the hedge funds that traffic in a lot of paper on the Comex, and we had a big run in silver from mid-December until basically late July. I mean, percentage-wise, it was a huge run. And so I think a lot of these hedge fund algos like you say, the open interest built up to a record level, and that's because the hedge funds were chasing it higher and the banks were feeding paper to them. But they also knew that they were going to have stop set. So I looked at this last sell-off as just a technical sell-off. Like, let's say that there is no manipulation. You're just looking at this as a technician. I mean, you could see just from looking at the charts where silver might retreat to, in a quote unquote technical recession. And that's essentially what we got, because now look at the liquidation of the open interest on the Comex in both gold and silver. It was just kind of another hit, wash, rinse, repeat cycle in what I call, a commitment of traders liquidation operation.
Well, that's exactly right. I mean, it was textbook. And the thing is, when is that ever going to change, and how? In other words, when we start going back up again, as you mentioned, the gold cartel, as I call it, just covered their shorts and the specs got fleeced. Well, we start going back up again, it's going to be the same drill. It's going to be the same drill forever until they blow up, until the physical market is strong enough to carry them out. Pardon me, this is just my opinion. Because if the gold cartel, as I call it, gets long, who's going to be short when the technicals move up again? It's always been the same thing for 20 years. It will never change unless there's some kind of reset or overnight deal once they've covered a lot of their short positions. And even that's a whole nother issue because of what it would do to any shorts in terms of bankruptcies and all kinds of things. So basically, the gold cartel is going to have to be overpowered at some point by the speculative interest, maybe they tie up the silver market at the same time to take them out, because this is a game that it's endless.
I kind of agree with you there. I think there's two things that could change the playing field, and that would be if someone were to go onto the Comex and start standing for delivery against all that short interest that the banks feed out into the market. And that would be one way. My guess is if Clinton's in the White House, we might find whoever does it, mysteriously dead of a heart attack in their shower. But the other thing is, if we ever had a government and a regulatory body within the government, it's supposed to be the Commodities Futures Trading Commission. If you could ever have an honest government regulatory body that would enforce the rules, the banks wouldn't be allowed to feed as much paper onto the Comex as they do. And the Chinese and the Indians love it. They're like, hey, go ahead, keep the price down. It just makes it cheaper for us to accumulate all the gold we can.
But speaking of the Chinese and the Shanghai Gold Exchange, I mean, wouldn't it make sense for China to step up at some point and move and just overrun the LBMA and the Comex both, and start setting the price globally in China, then just say to heck with the paper market?
Two things, if I may. One, people are scared to death of taking on the U.S. government. I've talked about this before, but Warren Buffett learned that many years ago when they were going to squeeze the silver market through Jimmy D. Piazza and Fibro, and said, yeah, you can go squeeze the silver market, and you're going to have auditors down your neck for the 10 years in every kind of business you can think of. This is when he was at Solomon, running Solomon.
Yeah, you're right. I remember that.
So, and of course, the Hunt situation is well known. So people are just petrified of doing something like that. But what was the other thing we were just talking about?
Yeah, but I mean, the Chinese have their own market. I mean, they have a pricing mechanism built into their system, and it's not a question. And in my opinion, I mean, you can correct me if I'm wrong, but I wouldn't see that as taking on the U.S. government at that point, as far as creating an arbitrage that just overwhelms the market from the physical and the paper, and just creates a gap that cannot be denied, and the Comex and the LBMA just kind of naturally fold under their own weight because of what? Because of the move that has been made on the Shanghai Gold Exchange. I mean, is that not possible, or is that just fantasy?
No, Roy, you were so right on, and quite frankly, we are somewhat there now. I mean, the premium of China over the Western price in silver was just as high as 90 cents, and been running about 87 cents, all last week. Well, that is just enormous for an arbitrage, and exactly what you're talking about, and that should occur. It's just when it comes to standing for delivery, and taking physical out. I'm not talking about to a small degree, but somebody making a big statement. It's been proven, in the past history, what can happen to you if you do. But you're exactly correct. And eventually all this buying over in the East is going to have, become the major effect on the market. And this gold cartel won't be able to get away with what they're doing. And it's just taking a lot longer than many of us thought. And I speak to John Embry all the time, and we both realized we didn't realize the financial innovation from 2011 on how great it would be and how it could affect these markets and the different things that they've been able to do, sophisticated as they are, to keep the prices where they are. And it has worked, and we expect that to blow up. We just don't know when.
When? It's always a question of when.
Yes, but any of us who predicted it or didn't think would end earlier have been wrong, because of what they've been able to do. And it is a question of when. And I think it's going to probably come out of nowhere and come on, overnight, some sort of black swan event, which we haven't thought of or hasn't been at least discussed as people looking forward to it to occur. And then all of a sudden everything's changed. And it's difficult to deal with it on a day-to-day basis like we're doing now, but that's the way life is. And that's why it's so important to understand what is being done, that these prices are artificially low in the sense of how they've been able to keep the prices down where they are, and what it's going to lead to. And it's going to be something that quite explosive and dramatic.
Yeah, I agree with that, Bill, and that's I've written about that recently about, there's going to be some sort of black swan that we can't see, and that the central bank or the bad guys, as you like to call them, they can't anticipate. But I mean, the reason why the Chinese don't drive up the price of gold on the Shanghai Gold Exchange is, why would they? As long as the West doesn't default on physical deliveries into China, why would they would be shooting themselves in the foot to drive the price higher if they can buy all the gold they want down here? I mean, at some point, yeah, there's going to be a shortage of physical that can be delivered into China, and that's when they'll step up the price. But my test for where you think the price of gold really should be is, let's say that China came out and said, okay, this is an offering wanted in comp. We want 500 tons of gold offered in one trade at the best price possible. I mean, at what price do you think someone could produce 500 tons to China? It would be probably double or triple the current price, at least.
Well, I mean, that certainly could be in the cards, and I'd certainly would love to see it, and have things change.
Does it have to be a volume of that size, Dave? Do you think? I mean, wouldn't even 200 tons do it?
Sure, I think 100 tons. If they ask for an offering comp on 100 tons, I think you'd drive up the market 2 to 3 times, because that's the price at where someone might offer it. And I don't even know if it would come out at that price. But
Dave, you just said, why would they want to do something like that?
Well, let's just say that, they're at the point where all of a sudden they realize, they don't. I don't know that they necessarily want to, step on the West's throat by bleeding them dry of all the physical, but they feel like it's all of a sudden they're having trouble getting deliveries, and then they just say, okay, let's see where the real market is now. Offer wanted in comp. I mean, that's how we would do it in the junk bond market with assets that were, well placed sellers. Guys who own the bonds didn't want to sell them, and they were well bid for, and we would just say, okay, offer in comp. Where would you offer some bonds? Because that's how you get the market going again, right?
Well, exactly, and that's a very good point. And that, ironically enough, could be the kind of black swan thing we're talking about, that people aren't prepared for it, and all of a sudden it shakes up the whole world market.
Yeah, I just don't see the Chinese overtly blowing up the Comex or the LBMA, because I think they'd worry about, stirring up even worse geopolitical consequences for the world.
Yeah, that's not really their style.
But
exactly.
If they did something like that, to me, it feeds into what you're talking about, because that would come out of nowhere, be a tipping point in the physical market, and be the kind of event that's not maybe what they want to do, but because of your junk bond analogy, presentation, I mean, that's what could happen, because they feel compelled to do it, not because they're trying to shake up the world scene.
Right, exactly. It's kind of like, okay, let's see where the real market is. Someone show us an offer. We want to buy this amount.
Exactly.
I like it. I hope it comes to fruition. I mean, anything. I just wish that something would change to break this market free. I mean, it's gotten to the point of being ridiculous how everything is.
Well, they continue to sell all rallies, and this thing with taking gold below 1,300 was, as Dave has expressed so well in his commentary, it's just ridiculous. It was so blatant. And now you've got gold down, holding 1,250 and above 1,260 nowhere, and they've got it off the investment radar screen in terms of affecting financial markets for the election. And here we are, just sitting here and pretty much in nowhere, Bill.
What about Deutsche Bank, Bill? Do you see that situation now that there's been the initial settlement, and now it's moving into phase 2, where the potential of HSBC, Scotia Makata, and the other criminals could be brought into the fold at this point? And how do you see that affecting the markets, or will it have any effect on the markets?
Oh, it's great to see, because it puts silver and manipulation in the same market, and it feeds off of what God has been yapping about for nearly 2 decades, and it's all there. But that's just the tip of the iceberg. And unfortunately, I'm happy for some of the people that we know in the lawsuit. It just takes forever for these things to get sorted out, and it's really not dealing with the real issue of the gold and silver price manipulation in the United States, and what's being done to keep the price down here. And that's what really needs to be addressed. And I think, unfortunately, it's not, because the U.S. government is partly behind it, or is behind it. And the U.S. government has a right to do whatever they want to do. And, of course, they want to keep it secret. As my colleague Chris Powell has said brilliantly over the years, they'd rather let our nuclear secrets known than what they're doing in the gold and silver markets, in terms of getting it out to be refuted. And that's why it's so hard for us to get the message out there, and for the industry to deal with it. And it's been a nightmare, and it's worked, and that's why we have to wait until this gold cartel can't do it anymore, when they reach that tipping point.
Well, Bill, you've been really generous with your time here. Rory, do you have any other topics you wanted to put in front of Bill?
No, I think that I think we've harassed him enough for one morning.
No, this is great. You guys do a great job, and I just can't wait for us to have a conversation like this when things have changed, and we go here's what's happened, and this is what all these guys in our camp that have spoken out so well about what's going on, how it plays out. And all they've done, this gold cartel so far, is thwart everything, and it has made it difficult. The last number of years, have not been very pleasant, and it's all going to change, and it's going to be spectacular. But getting from there to here has been tiresome. So all we can do is get the word out there and keep people in the game.
And speaking of getting the word out, Bill, you're going to be at the New Orleans Investment Conference later this week, aren't you?
Yeah, I'm leaving tomorrow. I'll meet my buddy Chris Powell there, and we'll meet some good friends of ours and do what we can to keep the word going.
Are you doing any keynote speeches, or are you delivering any addresses?
Chris is making an address, and I have a workshop, and we'll be on a panel, and it'd be again interesting to see some people I've known for a long time. I met Jim Blanchard, the founder, way back when, and
wow,
gave him a copy of the Gold Book that Frank Veneroso wrote. And it was a big deal back then, and it really set the tone for us understanding how this gold operation works. So it's always fun to go back to New Orleans.
Yeah, that's a good conference. I was there last year. Unfortunately, I will not be able to make it this year, and I wish you nothing but success and safe travels in that. And folks out there, if you're able to go, highly recommend it. It's a great, great conference. There are some of the heavyweights from around the world that will be there, including people like Bill Murphy and Chris Powell from GATA. And Bill, certainly appreciate all your time this morning. And I guess we'll talk with you soon.
Thanks. Oh, real quickly, Bill, do you want to tell us, speaking of getting the word out there, where listeners can find your nightly report? I mean, I have to say, I don't understand how anyone could possibly be involved in the gold market and not read the Midas report every night. And I've been reading it for, at least 12 years. So you want to tell our listeners where they can find your stuff?
Well, thanks, Dave. I appreciate the kind words. I'm at lametropolecafe.com, and people can sign up for a 2-week free trial and see if it's of value. And then through my colleague, Chris Powell, he does great work at www.gata.org, and you can get on that mailing list for free and find out what GATA has to say. So, again, we've been doing it since January of 1999, and we hope to keep at it for many more years. So thanks again for all you guys do, and have a great week.
Talk to you
Thanks
soon.
for all you do, Bill.
Thank you.